Hello traders. So today's trade was testament that trading doesn't have to be as hard and as complicated as we make it, and it doesn't have to take up most of your time or most of your day. So I woke up this morning and what I'm looking at is the aftermath of the CPI. So let me know in the comment section how you guys made profit or how you traded the CPI. As for me, I like to stay away from it. I don't like to catch the spike or anything. I just want to see like the aftermath. Okay, so looking at price action right now, as of now, what I'm looking at was a candlestick. What I'm looking at was price had gone above the recent day's high, but it didn't close above it, right? It only created a wick and it went above it, right? It only wicked above it and then closed within it, right? Okay, so looking at the 1 hour, we can immediately see this bullish candlestick. This is a result of the CPI. When it was released, price shot up to the upside. It spiked and moved quite a few pips, and then after that it started like retracing and pushing downwards. So the CPI came out in favor of gold. That's why you can see this spike up. That's the market reacting to that news. But am I going to base my whole bias on that? No, I want to see how price reacts to that news and how it absorbs it. So I'm keeping my mind open. I'm staying neutral and see how it goes. So now that I'm on the 1 hour time frame, what I'm seeing is price had recently created this low, right? Price went below it. As you can see, that price had gone below with this huge bearish candlestick with displacement. You see that it closed below it. Now there's also creation of an order block. Now let me mark that out for you. We have an order block created there. Bam. So it's not just an order block that was created, but there was also a fair value gap. Let me mark it up. This fair value gap that you can see right here. This fair value gap. So I don't want to overcrowd my chart or anything. Okay. So now what then can I see? Soon after price had created this huge bearish candlestick, right? It started creating like lower volume consolidation candlestick. Like you see this candlestick right here with almost like equal wicks both sides. Like you see at the top and then there's the bottom. They're almost like equal. So that's consolidation. That's the market showing indecision. So after it created that candle, price went below that candlestick's low and left a wick. It did not close. It did not close. So at this point, I could be looking for like my draw on liquidity. I could be targeting like this high to see if price would go back up into the fair value gap or go higher into the order block, or it could just go reverse from here. But I'm going to keep a neutral perspective. I won't be neutral. I want to see what price gives me. So with that in mind, I'm going to go to the 1 minute time frame to see the kind of price action that is there. Where the price wants to go up, price wants to do the fair value gap with the order block, price wants to shoot downward. So now that I'm on the 1 minute time frame, I'm going to be waiting to see what kind of price action I get. So let's play it and see. Right, so what I'm now looking at is I'm looking at an interesting scenario right here. Let me pull up the crosshair so you can look at it. Now, look at this move up. This green candle, right? It looks like a good, healthy move up, right? Which also created a low right here. And then, as soon as that move up closed, ended, price started moving downwards. These bearish candlesticks started moving down, and this move is actually good. We have 1, 2, 3, 4, 5, 6 bearish candlesticks to send price from this point to that point, right? But we did not get a close below the recent low. You see that price didn't close below it. Price didn't close below it, right? But then here's the thing to consider. You see this price move, you see this there's like 6 candles from this high to that low. That's 6 candlesticks. Now look at the retracement. How many candlesticks did they take from price to get to this low? Just to this level that it is. So it took less candles for price to go from this high to this low, to push lower, and then it's taking more candlesticks to push higher. So I'm going to go ahead and mark the last bullish candlestick, right, like that. Now that I've marked it, I'm going to act as my is my order block, or let's call it the resistance, the ceiling for this move. I want to see how price reacts to that level. So let's watch on. Let's play. Now we can see that as soon as price got into this level, it pushed down, went up, didn't go above this high, right, creating a low high, and then pushing down with a huge candlestick. This shows volume, this shows conviction, and it even went below this low, creating my market structure shift with actual displacement. So I know that this level is holding. This red rectangle right here is holding. Now if I'm to take a sell, I want to sell the pullback. Now let's watch. Now this is when I got my trade. Now that I have my market structure shift, a huge bearish candlestick and displacement below this low, and price extending to the downside, I'm going to, and then creation of a fair value gap and an order block. That shows volume, that shows strength and intent and conviction, right? So I'm going to pull up a Fibonacci retracement tool, because I want to see if the 50% level has been taken. Want to mark it in this high down to that low, and as you can see, the 50% level, it went into it, touched it, right, and then pushed downwards. Now what I was targeting was that low that price had swept earlier, that hourly low. Let me show you guys. So that low that price failed to go below, that's my target. Let's go down to the 1 minute again. Now as soon as we saw that red candle, my risk to reward ratio was weak. It didn't look profitable, it didn't look amusing. You see that my entry would have been there, targeting that, and then my stop loss would be above this candle, this swing high, which would have not been a good risk to reward ratio. So what was I going to do? I'm going to mark that order block that price created there. I mark that order block, this order block, and I'm willing to take a sell from there. Now that I mark that order block, I'm willing to sell from there. If price touches it, I'm going to take my sell trade. And this is my entry. So since this was the 1 minute time frame, I wasn't going to place an order. I just waited for price to touch it, and then that's when I took my trade, and then having my stop loss above there, and then targeting this blue line right here. Let's see how it planned out. Boom, TP was hit just like that. And let me show you guys the screenshots. So this is the moment when I was in the trade. You can see that it was still playing out. That was soon after when price had touched the order block right there. This was when price was approaching TP,